What's up everyone, this is Kenny here from Probably Stories. So last week, Bank Negara dropped a bomb on our side by raising the OPR on 1.75% to 2%, increased by 25 basis points or 0.25%. So many are wondering like how much I need to pay for my loan, am I affected? Why is the bank so cruel? They are doing this when endemic phase, we are all trying to get back on our feet. Why they do this? So before we actually go and answer all these questions, we need to go back to the basic. What is the basic? What is OPR? OPR stands for Overnight Policy Rate. So what is it exactly? It is a reference rate set by the central bank, in this case Bank Negara Malaysia, to all the banks. How it affects us as a consumer, it affects everything actually. Your lending, your deposits, your lending, definitely your interest rate is going to go higher, so you're going to pay more. Your deposit also, you don't forget, if you put in money today, the FD rates are higher. So this is especially good for those retired people, right? Their living expenses, they put in FD, and then they have been trying to keep it safe and also draw money out for monthly expenses. Okay, that is very good for them. You can think of OPR like this. Imagine today a durian plantation, durian trade is controlled by one entity. One entity will decide the price. That is Bank Negara. Second, they set a price, OPR. They sell off to the traders. These are the banks. The traders which will then take and this they turn into sell into a smaller trader, and turn into other products like maybe durian tempoyak, durian cendol, or durian cake, durian crepe. I don't know. There's so many products, biscuit, maybe to export and import. So when they sell to these raw materials, right, they have to add their cost, which is the OPR they bought from the big farm, and they add their profit. There's a certain profit margin to be maintained for the business to be sustainable, correct? So that's what they do. So OPR is something like that. Imagine there's a farm, and this farm is monopolized by one party, and then when that party actually sells the fruits to the traders, the party sets the price, the traders then again add a markup price on the fruit for them to have a sustainable business. Next, we move to the effects of the increase in OPR. As I mentioned earlier, the OPR will definitely increase your installment. The increase in OPR will increase in installment, okay? For loans, for housing loans or whatever loans it is, now it's going to get harder for you to pass. Imagine today your housing loan, you are at the borderline DSR, which is maybe the DSR for the bank is 70%. You suddenly, because of OPR increase, your DSR goes to 71% and you will get rejected, okay? Or reduce the margin for you to pass. Next one, if you are affected, the banks will definitely contact you via letter, email, SMS to inform you that your installment has increased and when is commence a new installment in view of this OPR increase. Don't have to contact your bankers, don't have to call them, don't have to WhatsApp them, because it's an automatic system corrected and they will send you a notification. The next question I think is on everyone's mind is why they choose to increase the interest rate right now. Is number one, to curb the inflation. Because you see, when the interest rate is low, which is like you can see from this graph is like 3.25 in 2019, right down to the historical low 1.75% since 2020, which is Bank Negara has given this interest rate since 2020. Now only 2 years later they increase. When they keep the interest rate low, like you pay lesser for your loans, correct? You pay lesser for your loans, you have more disposable income. When you have more disposable income, you spend on the economy, spend. Compared with the moratorium, I hope you all don't forget, moratorium, some of us, like myself, I've taken 2 rounds of moratorium, so I have more money to spend. More money to spend, right? Then things become everybody can afford. Everybody can afford, so they increase price. That is how inflation happens. Okay? So they're trying to cool it down by having a lesser disposable income, lesser money circulating in the financial system. That's why they increase the interest rate. Last is how to count how much increase in payment. You can use the phone app to calculate your new installment, or why not just go to our Google friend here, Google, and type refinance calculator. You will see this website, this is number one here. click calculator.net and you will reach to this page. Assuming your loan is 500,000, loan term 35 years, interest rate, current interest rate example 2.9, time remaining 35 years. Since you only want to calculate your new installment, right? So put new loan term 35 years. Assuming you have not start payment at all. And the new interest rate 3.15. Zero upfront payment charges. Refinance in Malaysia is free of charge. So assuming there's zero cost, so there's no cost here, these are all legal fee costs. And if you really want to refinance next time, then once you're ready, everything is insert, just click on calculate. You can see here it's very clear your refinancing, your new installment now will increase by 70 ringgit a month. This one is US dollars, but just 70 ringgit. This is the extra cost for your new loan. It costs you a higher interest. So the difference is 0.25, which is in line with the agreement. One glance you can see how much you actually owe the bank. Very simple to use calculator. Assuming that you actually goes up the loan to 1 million, the higher the loan, you will see the bigger the payment logically. So let's just assume a 1 million loan, it should be about double. Yep, 140 ringgit a month. So you can come to this play with your figures lah. So that's it for this video. I hope it helps you to understand a little bit about the OPR, why it happens, and what you can do about it. Until then, I'll see you again. This is Kenny here from Property Stories. Bye bye.